fundsupermart.com.
How did the Fidelity US High Yield Fund perform in 2012, and what were the main drivers and detractors of performance?
So 2012 was a very good year for the U.S. high yield marketplace as a whole, and it was a particularly good year for the Fidelity Fund's U.S. High Yield Fund. I feel particularly good about the fact that the key drivers for performance were actually based upon security selection. It's a testament to the rigorous bottom-up fundamental research that we employ and all of the resources that we bring to the effort. A lot of the key drivers of performance over the course of 2012 were some of the biggest holdings in the fund, largely Ally Financial and TXU. And believe it or not, some of the bigger detractors of performance were what I would consider to be more conservative investments that generated a positive return for the fund, but just weren't able to match the significant double-digit return of the asset class as a whole over the course of 2012.
How will you be positioning the portfolio differently for 2013?
I actually feel that the current positioning of the fund I'm quite comfortable with it. And so I'm not looking at making any wholesale changes. Depending upon where we are in the credit cycle, I tend to be either very aggressive or more conservatively positioned. I feel like I'm very well positioned now heading into 2013, where I would characterize the overall risk profile of the fund as sort of neutral. And I think that's the right way to be positioned for 2013, because I have a good fundamental outlook, which is the most important driver of performance, but there's not a lot of upside left from a valuation perspective. So I think being neutral from a risk perspective and really relying upon our superior security selection will help drive performance over the course of 2013.
How large a role does duration play in the fund's active management strategy?
Duration for U.S. high yield in general it's not a very high duration asset class, and so it's not something that I'm actively managing towards. It's something that I'm sensitive to, but really it's all about picking the right securities. Because U.S. high yield is a risk asset class, the most important thing we can do is avoid those costly credit mistakes. That's really what dictates most of my security selection and portfolio construction. However, where we are in the interest rate cycle today, I do have to be aware of the fact that interest rates are much more likely to rise over the next few years than decline, and so I do want to be cognizant of that fact. And so what I've been doing at the margin is trying to buy more floating rate securities that will benefit as interest rates rise. But again, factoring duration is not one of the key drivers of portfolio construction.
With the fund's investment focus in high-yield securities, which include unrated issues, can you briefly describe the key factors you look out for when selecting portfolio holdings?
Yeah, so it really is all about that fundamental research, and what we do very well at Fidelity is very rigorous fundamental bottom-up research. So we're just simply looking for a security that offers a superior risk-adjusted return opportunity. And that could mean a bond that's a 4% bond that we think offers superior downside protection, but offers total return opportunity if it becomes investment grade. Or it could mean a distressed security trading at 60 cents on the dollar that we think is worth 100 cents on the dollar and could generate significant total return for investors. So it's all about trying to figure out whether we're getting paid an appropriate compensation for the fundamental risks that we see going forward, and that's what we do on a security by security basis. Thank you.